Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by Ever.Ag. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy livestock producers manage the risk. I'm your host, Jim Matthews, reporting from Chicago on a lovely October 1st. I cannot believe it is October 1st, and I'm still wearing some summer gear here today. Gotta soak it up while we can, because we know winter's coming, but hey, we'll take what we have for the time being. Joining us today from Wichita, Kansas, Director of Feed Foundations, Mr. J. Kingsley, and from Platteville, the Paris, Southwest Wisconsin Grain and Feed Advisor, Mr. Brandon Weigel. Team, how are we today?
Doing quite well this afternoon, Jim.
Doing well, Jim. How are you?
I am doing very well. Brandon, is weather just as delightful in the Paris of Southwest Wisconsin as it is here?
It's scrumptious. It's beautiful.
Scrumptious. Jake, is Wichita scrumptious?
I would say so. We're going to be in the upper 80s for the rest of the week.
Come on now. That's beyond scrumptious. That's delicious. That sounds fantastic.
I'd say so.
I'd say so.
We're eating it up.
I can't believe it's October 1st. Cannot believe we can use food adjectives to describe how amazing the weather is right now, but it is impressive. New trading month, new quarter, partial government shutdown. Might touch on that here in a little while, but it also means that yesterday we had a stocks report that we get every quarter. We got this one at the end of September on the 30th, signifying our stocks of corn, beans, and wheat on and off farm as of September 1st. So we should be running through that in a minute. But first, Paige, if you'd kindly timestamp the broadcast, because it is Wednesday afternoon on October 1st. We did have a late recovery here in Chicago today, and might touch on that as well, because things were looking pretty red the last day or two up until later in the session today, and we mostly closed either back towards unchanged or in the green. So big turnaround in Chicago. We did have Dees corn close back up 1 cent at 4.16.5. We had Dees wheat up 1 1/4 at 5.09 1/4. Novi beans rallied a good 20 cents from its lows to close up 11 1/4 cents at 10.13. And December meal, stubborn little byproduct, was just up 30 cents per ton at 273.60. That all being said, we did have that slight turnaround today. Prior to that, trading in the red, markets under pressure, largely because of yesterday's quarterly stocks report. So, Brandon, now that we've had a day or so to digest that report, what was your initial take on the September 30th quarterly stocks report?
Yeah, it was definitely a report that I think caught a lot of folks off guard. I would say it feels like the market already had a lot of this priced in. And really, as we kind of headed into this, we had kind of expected a slight increase in old crop ending stocks. If you had watched basis markets at all this summer, they were never really indicative of a 1.3 billion bushel carryout number on old crop. Usually when you have a 1.3, you start to see basis values being offered to grain sellers late in the summer get pretty hot. Usually your end users are starting to get hungry by then, especially in a softening futures market. You generally have to see those end users get aggressive with basis values to continue incentivizing producers to sell grain. That never really happened this summer. So kind of all summer, the market was telling us, it looks like there's maybe a little bit more corn out there than a 1.3. Well, they did indeed come in and show us a 1.53 billion bushel carryout number for this old crop balance sheet. So this is the 2024-2025 balance sheet. So this was the final ending stock number from last year's crop season. So the market felt like it had a lot of it priced in because post-report, we really only dropped another 2 to 3 cents versus where we were trading ahead of the report. We opened up this morning quite a bit lower. And then like you mentioned, Jim, we ended up having a really strong recovery into the close. 11 out of the last 13 years, corn markets have finished higher on the 1st of October. So that trend definitely continued here today. Some of this uncertainty around the government shutdown didn't really seem to shake the market as much as some maybe thought.
Yeah, and I believe, and folks obviously feel free to check your social media sources, but we also did see a, let's say, early afternoon social post from the president indicating that he may be speaking to the Chinese leadership here in a month or so, and was fairly adamant that he would be discussing soybeans and the lack of sales that we have seen from the US to China. So I don't think we're in a position at the moment where we can verify how true that may be here in the next 4 weeks or so, but a significant thought, at least, that, let's say, turn the market back up. Maybe funds decided to say, hey, maybe we should cover our shorts just a little bit here, especially in soybeans, because beans definitely saw that bigger run of that 20-cent gain, towards the last part of the session, as opposed to corn just kind of bounced back up 5 cents or so to close, just a penny higher or so, let's say, on December. So interesting little tidbit also there. And Brandon, like you said, it's October 1st. And so the government is now experiencing a partial shutdown. We're recording this Wednesday afternoon. Hopefully, by the time you view this, maybe there's a resolution there. I'm going to guess not. But hey, we'll see what happens. But I think importantly for folks that are watching and listening, what we are still wondering is, what does this mean for reporting in terms of the weekly harvest reporting and the crop progress? What does it look like from export sales and export inspections? And then what does the October WASDE look like? Will we get the October WASDE report? And like you said, Brandon, yesterday's report is significant because it confirms the ending stocks of the old crop marketing year, what the carry in will be for the new marketing year, and what we have to work with on that new crop balance sheet. So, Jake, that being said, Brandon made some really excellent points on what we saw with those corn numbers. We are working with a larger balance sheet than the market was anticipating. And I think, Jake, you were doing some deep dives yesterday afternoon and this morning as well to see what would we actually need to pull in terms of yield, pulling those numbers lower to really even threaten what looks like a larger balance sheet than we were anticipating. So, Jake, what'd you come up with during some of your deep dives?
Yeah, I think so. When you start to study this thing a little bit, yesterday's report came out with about 175 million bushel increase to the ending stocks number for this past crop year. 1.5 billion bushels and change of ending stocks is the new number. That, of course, will then translate over to the beginning stocks number for the crop year that we're harvesting now. Of that 175 million bushels, only about 25 million of it was allotted to production increases, which we could then infer, given that ethanol and export data is fairly verifiable and auditable, implies that the other 150 million bushels of change over there was likely from the feed and residual row of data that we've been talking about for a while, which is currently pegged at 6.1 billion bushels on this new crop balance sheet. And that adjustment lower on old crop would put it down closer to 5.5, 5.6. Effectively feels like you're almost a half a billion bushels overshot on the new crop number, given that herd sizes are relatively similar year over year, arguably maybe even a little bit smaller on the poultry front and the beef front. I think the hog herd is relatively static. I know the dairy herd grew by a little bit, but not enough to account for half a billion bushel increase. So you also have to remember that we're shipping more corn to Mexico to feed cattle that are being retained in that country due to the screwworm issue that we're contending with. And so when you bring a bigger beginning stocks number in and you feel that you can reduce your feed demand by, let's just say, 250 million bushels, half of what it feels like it was versus last year, you can still end up in the low 180 somethings on yield, 182, 183 bushel yield, and be right there at a 2 billion bushel ending stocks for this next crop year, which is very healthy. Something that we've been watching for a while here and wondering, okay, how do we continue to trade 4.25 corn? It looks like that corn market's fairly tethered to bean price at this point. Beans were certainly the leader here today. I think there's some concern that if you take corn too low, then your bean market's gonna take some of those acres pretty quickly. So those two are, as always, they're tied together, but beans are leading it, maybe being a little bit of a support factor there at the moment.
Yeah, and Jake, I would say just to, I guess, review what those soybean numbers as well. I mean, the soybean numbers, I think from that report, you could argue were not outrageously bearish, right? I mean, I think you could say that the wheat numbers may have been, I don't want to say they're outrageously bearish, but the wheat numbers seem to be outright bearish, whereas the corn numbers were also fairly bearish. Beans, not as much. I think we could argue that beans were maybe neutral to even supportive in terms of what the actual numbers came out versus estimates from the average trade guess. So it's kind of interesting the way beans have reacted, because you could argue then that soybeans just somewhat overlooked that report and said, as long as we're not selling to China and that yield remains okay, we'll still have a good enough balance sheet. And if there's not as much demand, we're going to take some steam out of this market, which we did. We took Novi beans down below $10 ultimately now, the last two sessions. And again, with what was a late kind of curveball, shout out to postseason for baseball here, but with a little curveball from the president, you then rally beans a bit. And like you said, Jake, what does that mean then, for the next couple of days as we try and digest that one too? We talked about how we might be lacking some data as we start to move forward. I believe we were even supposed to get a oilseed crush and grain crush report today from the USDA, which I believe we did not see that report ultimately be released. So we're already seeing some reporting stalled due to this partial shutdown. The one stat, since it is October, we keep beating that up, but it's harvest time, and we're supposed to be excited every Monday afternoon to see what our harvest pace was in the Midwest. We know the American farmer can get after it when it comes to that pace. They can achieve a ton of ground in a short period of time. So we're always excited to see that progress. And we might not get to see those reports on Monday afternoon. So, Brandon, in terms of what it feels like we are experiencing from the heartland and harvest pace, what are you hearing from the Midwest?
There has been rapid progress so far. I mean, as of Monday, corn was 18% completed, soybeans were 19%. And I would say since that period and really the rest of this week, it looks incredibly good for harvest pace. I mean, lots of really warm, dry weather reports thus far that the crops are drying down really quick, maybe too quick in some instances. Hearing a lot of soybeans that are coming in 9-10%, which is causing a little bit of more head loss than what is desired. And then anybody that's still trying to take off silage is also seeing some issues with things drying down quicker than expected. So I would anticipate that the pace remains in very good shape here for the near term.
Yeah. And I guess, and Jake, from what you've seen then, from what Brandon's reporting on the harvest pace, have you seen an impact on basis in the Midwest for our feed products?
Yeah, I mean, we continue to see offers come forward from vendors at pretty attractive basis levels. I think you're seeing these lines start to stack up at a lot of the processors as beans come in and bin space fills up at those facilities. And so they're trying to keep product moving. Been a little bit of what we've been waiting for on the cash front. And I think that time is now, especially with futures having today, at least briefly on soybean meal, punched in some new lows there. So cash prices are attractive. Harvest is cruising right along. And I do think that as harvest starts to wrap up and those lines start to shorten back at those processor facilities, you could see basis perk up just a little bit. So now feels like the time to be active there if you hadn't been already. You had mentioned earlier that balance sheet's not unhealthy, but it is a lot thinner than corn is, relatively speaking. And there are questions about yield and export demand. And if we come in and find out that yield needs to be trimmed a little bit, that's going to put some support under this crop. I think the word export in the right light gets this market excited pretty quickly, as we saw today. Again, we're putting in new lows here, but they're not tremendously below where we were back in July. Worth taking advantage of those if you have not already, because it just feels like this thing is looking for a reason to run back higher if it can find it. So it may not go run too far away from us when it does, but you're not missing a whole lot if you step in here now either.
Okay. Excellent. Thank you for that guidance there, Jake. And thank you, Brandon, for your feedback and insights as well. That being said, gentlemen, thank you both. Thank you for your weather-related descriptions today. I think this is a lot for us to think about in terms of using food adjectives to think about how we treat the weather, especially as it gets bad. Like, let's revisit this December, January to see what kind of adjectives we're using, because that could get really interesting. But in the meantime, thank you both for being here. We, of course, would like to thank the Ever.Ag Insights crew for their support. Thank you to Paige for production magic, and thank you to the viewers for watching the Grain Feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. See you next time on the Grain Feed.